Today, we're going to be looking at a couple metrics that will likely have a huge influence on Bitcoin over the coming weeks and months. And the first one here is the BTC versus DXY chart we have here under the portfolio tools section on Look into Bitcoin. Now, the DXY is the US dollar strength index. So if we just come down here a little bit, we can actually see the calculation and weighting of the US dollar versus other currencies to get this, like we said, dollar strength index. And as Bitcoin is by most people measured in its price versus US dollars, it can be really handy to see how the strength of the US dollar is doing compared to BTC. Historically, we've seen this very much inverse correlation of positive Bitcoin price action and positive DXY price action. Once we see the dollar strength massively increasing, we typically see the Bitcoin price noticeably decreasing. Now, this obviously makes sense. If we're measuring Bitcoin against something that is massively increasing in its relative valuation, then it only makes sense that Bitcoin is going to decrease in its valuation. And as the demand for dollars dries up, more people want more risk on speculative assets. The DXY decreases in strength. Nobody wants US dollars anymore. Maybe we see Bitcoin have huge runs up to the upside. And historically, this has been the case. When we can see now, we're actually at a pretty key point, I would say, in the dollar metric. We can see if we just come in here that we're kind of coiling in the DXY price action here to the point where I would say we're likely going to see a very decisive move either to the upside or to the downside. We can see that the dollar strength index has been decreasing massively over the past few months and year or so, and this is correlated very nicely with Bitcoin's price increasing massively. What we can see is as we see this coiling in its data here, that, like we said, we're going to have to see a decisive move either to the upside where we see the dollar strength increase rapidly or potentially break downwards and see the dollar strength decrease rapidly, which would be very good for the Bitcoin price action. But how can we maybe get a little bit of insight into which way this is likely going to go? As we said, usually when we see contractions in data points, once we see a low level of volatility that precedes huge explosive moves either to the upside or the downside, we can see these long drawn out periods of very stagnant data in this metric lead to these huge moves. So it's probably likely in the next few weeks and months that we're going to see a big swing in the dollar strength index. So if we actually go to the same metric but looking at a year-on-year basis, we can see that the dollar strength on a year-on-year basis has actually been performing pretty poorly. We can see that this usually tops out at Bitcoin price action bottoms, which is great for timing our bear market accumulation areas, and usually bottoms out as Bitcoin's price is peaking at its all-time high, at least the all-time high at that point in time. And if we can see here that this has actually been trending a little bit to the upside, at least the bottoms have here. I'll draw that line a little bit better. We just see here, we can see that this has been trending to the upside, which maybe indicates that on a longer term macro basis, the dollar isn't getting weaker and weaker every cycle, which may be contributing to the diminishing returns we've historically seen throughout Bitcoin. Although this cycle has been a little different, we've seen Bitcoin break its previous all-time high prior to the halving event, which has been a pretty historic point in Bitcoin's history. However, like we've seen over the past few weeks, this has actually started to increase quite noticeably. And if we just zoom in here, we can see that this is lined up pretty perfectly with Bitcoin's recent retracement we've had. As this was decreasing very rapidly, we saw this increase in Bitcoin's price action. And as Bitcoin topped out at the most recent all-time high around $73,000, $74,000, and this started to retrace to the low 60,000s, this was when the dollar strength was increasing. So there is this very obvious and clear inverse correlation. So it'd be very much in Bitcoin's favor to see this continue to decrease to the downside and hopefully break this trend of higher lows we've seen in this metric. But how can we, again, maybe get a little bit of an indication, a little bit more insight into which way this is likely to go? Well, if we look at something like the Treasury yields, this really outlines the sentiment amongst traditional market participants and ultimately gives a risk on sentiment to Bitcoin and more speculative assets like other cryptocurrencies potentially. And my favorite one to look at is the 2-year Treasury yield chart. I think this gives a really good both short-term and long-term idea of the confidence in traditional markets. And what we can see is as this decreases, this has historically led to Bitcoin's price increasing because as the yields are lower and lower, less people are buying government bonds, more people want speculative assets. It makes sense. Yet when we see this rapidly increase, this has led to Bitcoin bear cycles. Like we could see just more recently here, as Bitcoin hit its all-time high, this is when this rapidly started increasing. And again, this peaked the Treasury yields, at least on a short-term time frame, as Bitcoin's price bottomed out. They were very much matching one-to-one. And as this increased rapidly, Bitcoin's price decreased. As this dropped massively, it was when we saw a huge run-up in the Bitcoin price action. And if we just zoom in over the most recent few months here, we can see that again, there's been this perfect inverse correlation, where as this was pretty stagnant, we saw Bitcoin again not really deciding which way it wants to go, if it wants to be bullish or bearish. We see this start decreasing very rapidly, and we see Bitcoin's price increasing very rapidly. And if we just look to even more short-term data, we can see that as Bitcoin topped out in this most recent local move, it was actually as the yield started to noticeably increase, and now we've bounced, the yields are decreasing. So I think these will both be really key metrics to watch, especially over the coming weeks and months, as we've seen this treasury yields be stagnant for a number of years now. We're basically at a point that we were in 2022. So 18 months ago, data is still about the same level. So it'll be interesting to see, because again, we're seeing a little bit of a coiling price action on this metric, if we're going to see a little bit more explosive move either to the upside or the downside. Hopefully, like we said, we see these continue to fall. Sentiment in traditional markets continues to shift to a more risk-on, bullish and speculative market conditions. And we see the DXY not only lose strength against other currencies, but we see treasury yields start to decrease. That would be very bullish for the Bitcoin price action. However, given the fact that not just Bitcoin, but many other traditional markets are looking a little bit overextended to the upside, maybe it's time that people are locking in some profits. Maybe people want to start rotating into US dollars, buying treasury bonds, and just collecting that couple percent interest they do every year. So keep an eye on these two metrics in the very near future to really help us plan and take appropriate action with our Bitcoin investing. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we've discussed today, as well as the many more that are available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, both the DXY, which is the US dollar currency strength index, and the US 2-year treasury yield charts have historically had a very strong influence on the Bitcoin price action. When the DXY is increasing, we can expect BTC to struggle, at least against the US dollar chart. And we now look to be at potentially a very key point for dictating the trend in the coming weeks and months, not just for the dollar strength index, but subsequently the Bitcoin price action too. And alongside that, the US 2-year yields also lead to negative Bitcoin price gains when increasing, and is now also looking to be approaching a decision point for risk-on or risk-off sentiment for markets. So it'll be really interesting to see both of these in combination as confluence to see if we should be more risk-on over the coming weeks and months, or maybe if it is the time to really start de-risking and potentially start taking some profit on our positions. If you like this video, then please visit lookintobitcoin.com, where you can consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools like we used here today, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what other on-chain, macro, other data points you're looking at over the coming weeks and months to maybe dictate and assist with your Bitcoin investing and analysis. Let me know in the comments below and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.